Hi, this is Joe Rabil from Rabil Stock Research with your Daily 5. For the past 30 years, I've been providing research and consulting to some of the biggest portfolio managers on Wall Street. Today, I would like to look first at the growth versus value and give my take on what I'm seeing developing there. Then I'm going to provide a few individual stock ideas based on this comparison. When I go through my reviews, I'm identifying a number of individual patterns that I think look pretty attractive on the value side of the equation. But let's get started looking at this IWF versus IWD. So I'm looking at the Russell 1000 growth versus the Russell 1000 value, and that's the black line here. So when the black line is moving higher, that means the growth is outperforming, and when the black line is falling, it means that value is outperforming. So if you notice what's happened, and the reason why I think this is worth discussing, it's sort of a unique situation because the reality is that the price of the IWF has been moving up. I mean, the direction since late last year has been making higher highs and higher lows. But if we notice, the pattern of relative to the value has been declining. So I kind of view this as a troubling situation, I think, for the growth side. And my reasoning is when I look at IWF by itself, not compared to anything else, but just looking at the price pattern, it looks to me like there's some signs of slowing momentum. So the 250 mark, it's at around 254, 255 at this time. You know, if we don't hold this 250 mark, then I think that sets the stage for some type of a corrective pattern, even if it comes down to 225 to 230. I'm not necessarily looking for a big, massive drop. But if you look at what's taken place, the value has been outperforming, even though the price of growth has been making higher highs and higher lows. So I think if we go through a corrective wave or a corrective pattern in the growth pattern, then really I would expect value to continue to outperform, maybe even more so than what we've seen since the beginning of this year. So something to keep an eye out for. If we see further weakness, yesterday was a pretty rough day for a lot of tech stocks. We'll just have to see if we get some follow through by the end of the week. And I think a poor close below 250 by the end of the week for this index sort of confirms some of the momentum slowing signs that are starting to take place. And I think that just increases the likelihood that we come down and correct a little bit more on the growth side. And so, I want to look at a few individual stocks, and I want to make sure as we go through the rest of these daily 5 that, we're kind of, so I'm looking at chemical stocks today. I've got 4 different chemicals, all with pretty attractive patterns here. And, I started with the materials, basic materials sector, and sort of worked down to this, and noticed as I went through the entire sector yesterday, there were a number of individual chemicals that actually looked pretty similar, but all have, I think, pretty nice qualities and things that I look for. Again, what I try and do is I'm trying to marry the price pattern in the moving averages with a MACD pattern that I think looks attractive, along with the 80X. And I like to do that in multiple time frames. So I've got a monthly, weekly, daily, and then I've got another weekly over here with the relative strength. But today I really kind of want to focus in on the weekly chart and the daily chart on the right here. And one of the things that's attractive to me is we've come into the 18-week on these stocks. So we've made pretty strong runs. And if you notice, every time we come into the 18-week, at least for DOW, which is our first stock here, it's bounced off of it really well. And it just did it again just recently. The difference this time is that it has more of and you can see it pretty clearly on the daily chart, it has had a pretty nice correction in the MACD where it was overbought and has kind of worked its way back towards the 0 line. And so I know a lot of people like to see the MACD actually come down below the zero line to provide buying opportunities. But for me, I have noticed that strong stocks tend to only work back to zero. And sometimes you get a little bit of an overrun at that line, but really pullbacks towards the zero line, I think, tend to be pretty attractive. So in this case, I really like the way it worked its way down as opposed to like a violent move down to it and sort of V-bottoming. This was more of a gradual decline, and that ends up allowing the stock to work sideways and form sort of a consolidation pattern. And I don't know. I think overall, this just has some pretty attractive qualities to it. So one of the things I like to look for is where price has worked sideways long enough to allow the MACD to work down to zero, but also the ADX being at a low level. Right now it's at 10, well below the 25 mark. And, that's again, when I can combine those two criteria along with price consolidating to the side in a sideways fashion, I think you've got a pretty attractive pattern developing. Let's go on to the next stock here, which is Dupont, which is definitely a little bit different. We got a little bit more history here, and you can see on the monthly chart, we've made a pretty big drop and then almost like a V-bottom reversal. And if we look at the weekly, again, we've made this kind of nice move. Look at the pullback. Last year, we had a couple pullbacks, both held the 18-week moving average, and then we got a really strong move to the upside, and then pulled back again and held the 18-week, pushed up here to around the 80 mark, and then have consolidated sideways for about a month or two without breaking the 18-week. And the 18-week is rising at about the same rate of the 40-week. You've got a pretty attractive support based on the moving averages in place, and now it looks like it's trying to emerge out of this 80 level. So again, if we go and look at the daily chart, we've got low ADX and we have a MACD that's crossing and turning right at the zero line. So again, this is a really attractive situation. While this is set up different than Dow in terms of the way the price pattern developed, I still have a lot of the same attractive characteristics that I like to look for. Let's go and look at the next stock, LYB, Liondell. So this stock has made a really strong move, but it has the same kind of characteristics. And again, I think this is really important to recognize when a stock is respecting a moving average, like the chemicals have been doing with their 18-week moving average. You can see this pullback held, this one, this one, this one, this one. And then this time, again, it was more of a sideways pattern. It didn't actually touch the 18-week, but it did pull back to the breakout level right around 100. And then again, look at this same pattern that has developed where we work off this overbought condition. So we're overbought and kind of stretched away on a MACD basis away from the zero line. And then it spends several months consolidating down in an orderly fashion back towards zero. And again, and then it kind of just works sideways as opposed to being a vertical bounce, like dropping down and vertical turn back up like it did here. I think these are a lot harder to handle. In this situation, you've kind of built a sideways consolidation pattern, and now you can see it's trying to emerge out of it. Low ADX, MACD turning up from the zero line. So again, I think a pretty attractive pattern from that standpoint. Let's look at our last stock today. NTR. So we can see on a longer term basis, if you look at this long-term monthly, we broke out above resistance. And then again, go and look at the weekly chart and we've got, the breakout and then the pullback. So what was resistance back in 2019 becomes support after it's overtaken and it pulls back to it and finds support right at that level. So I find that to be pretty attractive. The other thing that's really attractive about this one, other than the fact that, again, it's pulled back and respecting the 18-week, notice how the ADX, this blue line, has shown some pretty good strength getting up to almost 40. And then during this correction, it only came down to around 25. So it's holding above the 25 line during the correction period. And then finally, looking at the daily chart, we've got this similar pattern, consolidation, MACD turning right around the zero line, low ADX, and now we're starting to see some improvement in the buyers. So overall, pretty attractive setup. And I think, the chemicals look like they want to at least make a trading move over the next, 2 to 6 weeks to the upside is what it looks like to me. And some of these stocks that have the bigger base breakouts probably have more to them than that. So I hope you enjoyed this segment. You can contact me through LinkedIn or find my research on rabilstockresearch.com. In addition, I do have a YouTube channel and a book called Invest Like a Pro, which teaches investors how to use trend and momentum in multiple time frames. Have a great trading day, and I'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.